Welcome, dear traders. It's me, Kate Stichin, and you are watching a recap of the Asian session on September 13. WTI crude oil futures held near 10-month highs today. And the news was another source of concern for the markets as more expensive energy leads to higher inflation. Let's see what other factors influenced Wednesday's trade in our review. After yesterday's sluggish trading session on Wall Street, Asia-Pacific stock indexes traded sideways and lower today. Japan's indexes stood out as a fresh economic data showed an improvement in the sentiment among large manufacturing companies. At the same time, business confidence among Japan's largest manufacturers fell in early September on concerns about China's sluggish recovery, and notably Beijing has repeatedly promised additional stimulus measures, but the country's authorities implement them at a slow pace, adding to the market fears. However, on the back of some positive news from a troubled developer, Country Garden, the Chinese real estate sector has revived in the recent days, and the company was able to postpone its debt payments for 3 years. As a result, shares of Chinese real estate companies soared. Nevertheless, the weak performance of Asia's largest economy still harms investor sentiment on a global scale. As a result of global market fears, investors started to refrain from risky assets and turned to safe haven ones. As a rule, they see the US dollar as a primarily safe haven asset. This trend is even more relevant today as the markets await the release of the key inflation data in the United States, which will influence the Fed's monetary policy. At the beginning of this week, we could see how unpredictable the greenback reacts to economic indicators. Amid upbeat data on the US labor market and business activity, the greenback posted its biggest one-day drop in 2 months. However, it would be more logical for the Fed to strengthen the national currency in such an environment. The stability of the US economy allows the regulator to keep interest rates at a high level for a longer period of time. Meanwhile, analysts explained the US dollar's slump by the reduction of long positions in the forex market. How will the greenback behave today? If inflation data shows a strong figure, the US currency may move into the green and reach last week's 6-month high. Meanwhile, the US dollar index is moving within a weekly trading range of 104.50 and 104.80. On Wednesday, the US dollar index traded near 104.70, maintaining its bullish momentum. The recent hawkish comments from Fed policymakers supported the greenback and prevented it from falling below the crucial level of 104. The dollar-yen pair is also affected by comments from financial officials. After yesterday's bullish comments from the head of the Bank of Japan, the yen has retreated against the US dollar. The pair's largest single-day gain in 2 months came on a Monday. At the time, markets took Kazuo Ueda's comments about the possible early exit from the negative interest rate policy as a hawkish, but the initial effect has faded as the day have passed. In fact, Kazuo Ueda did not promise anything concrete. As a result, the yen was among the losers today, falling to 147.3 against the greenback. The dollar-yen pair rose for the second day in a row, reaching a weekly high in the range of 147.00 and 147.50. Although technical indicators are firmly bullish and fears of intervention may protect the Japanese currency from a large sell-off, especially ahead of the important US Consumer Price Index report. For the Australian dollar, the anticipation of key reports from the United States and China today turned into a decline within the daily range of 0.6399 and 0.6434. Against the backdrop of the US dollar's potential strength, Australia is becoming increasingly concerned about weak data from its major trading partner this week. On Friday, China will release reports on retail sales, industrial production and unemployment. Judging by the Aussie's drop to 0.6410, market sentiment is not optimistic. As a rule, the New Zealand dollar usually follows the Aussie's steps. However, at the beginning of Wednesday, the Kiwi broke this rule. Instead of falling, the Australian currency's decline, it increased against the US dollar. The New Zealand currency received a boost from domestic data, and today's domestic food price index suddenly rose to 1% from a minus 0.5 in July to plus 0.5 in August. This gave the Kiwi hope for a rate hike, and it began to strengthen in the range of 0.5886 and 0.5915. However, there are still a few weeks until the Reserve Bank of New Zealand's meeting on October 4th, and the country's currency can change directions many times. The Kiwi closed today's Asian session with the green figures near 0.5905. Yesterday's inflation data was bearish for the Indian rupee. Reports showed that consumer price index fell to 6.4% year-over-year. On the other hand, the Reserve Bank of India intervened in the last half hour of a regular over-the-counter trading yesterday. This supported the rupee. As a result, the rupee managed to stop a 4-day losing streak against the US dollar. After rebounding from a weekly low of 82.8 during the Asian session on Wednesday, the pair rose to around 82.9. Against the euro, the rupee has been trading lower in the range of 88.90 and 89.10 since the beginning of the week. And that's all for now. Leave your comments below and don't miss our next video review. Remember that staying up to date is the key to success in your trading, and see you online soon.